I have a important YouTube video that I want to get out. Today is May 13th, 2022. It's a Friday. And in this point in time, the NASDAQ is down about 27% from its all-time high back in November. S&P 500 is about 17% down from its all-time high. And there's a lot of other stocks that are down. You know, some of the larger, like Apple and all that, are down about that. Some are down a little bit more. And there's another dark side to this as well. Cryptocurrency is a big thing, and the cryptocurrency Luna has crashed. It crashed because of a liquidity event. Everything collapsed, and it literally went from about $100 a coin to zero. I don't even know if it'll go back. I don't know. Maybe sometime down the future. Again, this video is recorded on Friday, May 13th, 2022. It may. I don't know. But you know, when I set out to do YouTube, I wanted to do a series of what I think young adults need to know about personal finance. And I've been talking about budgeting and all of this stuff, but I need to talk about this. I need to talk about this because this is so important. And I'm probably gonna do multiple videos on this because it's that important. And I want you guys to learn from my mistakes. I want you to learn from other people's mistakes. I want to do my part to help you understand the pitfalls so that you don't make the same mistakes that I have done. And you will also know more about what I know, what I've experienced. So I want to share that. Before I go any further, if you enjoy my content, I would appreciate it if you like my videos, subscribe to my channel, share it with your friends, and then hit the bell so that you get alerted when I release new content. But, okay, let's talk about this. These are pitfalls of investing. These are the pitfalls that I have seen. Now, ground rules. I do long-term investing. I also do some stock trading. Trading could be a day trade. Trading is mostly going to be swing trades. They're going to be short swing trades, at least in this market. That's all you're going to get. But here's the thing. The approach to both of those, while they are different, and I do recommend that if you're going to trade, have a separate account for it. The approach is going to be similar in some aspects, and these are a lot of the same pitfalls that I see with people, and I want to bring them to light. And the first one is a lottery ticket. Now, what do I mean by a lottery ticket? I mean, people view the market as a lottery ticket. They view it as, I'm going to hit that one play. I'm going to hit that one play that is going to make me 1,000,000% in a week, and I'm going to walk away and have all the money in the world. It doesn't work like that. It's very rare that that happens. I know in 2021 it seemed like it happened a little bit more often, but there are still a lot of people who lost a lot of money in 2021. You cannot view the markets like that. You cannot view the markets as a lottery ticket. It is a long-term wealth growing machine, but it's long-term. And if you're going to trade, you need to trade with a goal of making just a little bit each day. If that's your goal, that's what you want to do. You don't want to, you're not trading to go YOLO all in and lose all your money. You're not doing that. And, you know, with Luna, it's no joke. People put their life savings in there and they're talking about committing suicide. This is not a joke. And it's because you put it in something that you thought was going to be the future. You thought it was going to be worth more. You weren't diversified. And we're going to talk about that. Blindly following others. That's another big pitfall I see. I see that more on trading, but it also happens in investing where people are like, hey, I'll go on social media, which is number 3, social media. We'll combine those two. I'll go on social media and so says, well, they say that the market's going to collapse and go down another 50%. And, you know, they might say why, or they just say that. And then you're over there like, oh my gosh, I better go sell. Well, you might miss a run up. Okay. Yep. So you might miss a run up because of that. So because you listen to somebody and you acted on that, not knowing if they were just full of crap or not. Half the people on there don't know what they're doing, probably more than that. If anyone tells you where they think that market's going to go, or they tell you it's, that the SPY is going to go down to 350, which the SPY is the S&P 500 ETF, so you can look that up. But if they tell you it's going to go to a certain number on a certain date, they don't know. They don't know. They know nothing. So I get bothered by this because people blindly follow others. I see it in a lot of trades. And I did that last year in 2021. I would follow, when I first started trading, it's like, oh, well, that person knows what they're doing. They made a lot of money. They go in there and they buy that stock and you buy it and it goes down. You're like, well, why did it go down? Well, you don't know when they enter that trade, you don't know what their target was, what their goal was. They could have been front running it and then they pump it. So in other words, they get in it before you do. They have a lot of followers. They talk about it and then it runs up because they have a lot of followers. Everyone buys it and then they get out and then you're left holding the bag. At the end of the day, though, you have to know why you're making a trade. And your goal is, if you're going to learn to trade, you need to be able to do it without looking at anyone's social media opinions. If you're going to invest, you need to have conviction in your strategy and how you approach it. If not, you probably need to hire a financial advisor that you believe in. So those are important things that I want to hit home for you. And these are just big pitfalls. Do not do these. Just be careful. Not that you can't interact, because there are some really, 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 really great investors and traders on social media, but you have to find those people. Psychology. No one likes to be down 30%, but when you invest and you're investing long term, this is what happens. That means if you have a $1 million portfolio, you could be down $300,000. And you're like, oh my gosh, how long did I have to work to get that? Oh my gosh, everything's going to fall. Okay, what do you do about it? You have to decide at the end of the day how you're going to act when you invest. Because at the end of the day, your brain will play tricks on you and will cause you to do things like sell for a loss when you should have held, or you're chasing, like you're buying an investment that somebody recommended to you because you want to claw back your gains, all of that stuff. And all that stuff will distort your portfolio over time. So you have to really make sure that you understand yourself, because a lot of investing is relies heavily on psychology. If you're down big in a position, maybe what you do is you just step back and just understand, hey, why am I down big? Should I cut it? And just go through your own analysis. Go through and figure out why you entered, why you took it. If the answer is that you did it because someone else did it, well then probably you don't need to be in it. If you think it's going to be a long-term investment that's 3 to 5 years out and you're okay being down, awesome. Stick with it. If you're down on a big stock like Google or some quality company like the S&P 500, well, just remember, hopefully you're investing for the long term. Do not put money that you need 3 to 5 years out in the market. Just don't. Don't do it for less than 5 years. Just don't do it. Just stop. Leave it as cash, because you don't want to, with the point you need it, half of it's gone. You don't want to get to that point. Long-term market. Keep your cash. Not understanding. So I see this a lot. People do options, which you need to understand how they work. And people will take trades with options and they have no idea why they did it. They're just doing it because, again, it goes back to number one, lottery ticket. Don't do that. Trade for the right reason. Risk management. Taking too much risk. There are people on Luna that lost their life savings. I think I said that earlier, but there's all risk. You put all of your eggs in one basket, and that's what happens. You contrast that with somebody that maybe put $1,000 in Luna and they have $1 million portfolio. They're like, okay, well, that sucks. I'd like my $1,000 back, but you move on. It's no joke. You have to diversify. I know people poop on it, but you have to. In your long-term investments, you need to have diversified sources of investments, like an income. Like, you want to have that. Do that. Another thing with risk management, if you own your own house, if you have no debt, that allows you to take more risk in the investing realm, because guess what? You don't have payments. You don't have payments. So you don't owe anybody anything. So just remember this. Remember this. Not diversified, I just talked about that. And I said apps. And the reason I say apps is because the apps now that they have make it so easy to invest, so easy to trade. It's easier than ever for them to take your money. And again, I am not advocating it not to trade because I do it. I'm still learning. But learn the right way. Learn from respectable people. Do not chase lottery tickets. But the apps are there. They make it easier than ever. And it is so important for you to have the temperament to calm down, assess where you're at, and make the right decisions for yourself when it comes to investing or trading. It's not to say that you can't talk to other people. It's to say that at the end of the day, the decision is on you when you push that buy or sell button. You got to remember that. So again, my heart goes out to all the people that have lost money on Luna. I hate that. It's a painful lesson. And I would tell you, like, you got to move on, understand where you messed up, and you just got to, you pick it back up. But what you don't want to have to do is don't make that same mistake twice. Get back up on your feet, build that investing nest egg back up. The market will come back. It always does over the long term. I don't care what anyone says. You have to play the long game. You just have to. So hopefully this was valuable. If you have any questions, you can always reach out to me on Instagram at mdeepcpa. That's DEEPE for deep. Or on Twitter, mdeep_CPA. Or you can drop a comment below. Have a fantastic